Hello, welcome to smarthelping.com. We have an upgrade to the full marketplace or network financial model. I'm going to go over that with you as well as explain all the parts to the template just to give an overview. So, at a high level, this template allows you to create a monthly and annual 5-year forecast. It has income statement, balance sheet, cash flow statement, distributions, executive summaries, and the way it allows the user to create the forecast is based on assumptions around buyers and sellers connecting, and the platform that's connecting them is your marketplace or network, and you're taking a fee on all the transaction activity. There's also logic for ad revenue. I'll get into that more in a second, but let's just look at each tab. So global control, you can define the name of the company. That's going to flow through to the financial statements. The launch year, this is going to determine the start year of the forecast. Launch date's a formula. End month is you can define if you want to end the forecast, at some month other than you can end it in 5 years or some amount sooner than that. Exit year is a populated value. Include terminal value. So lets you decide if at the end month of the forecast you want to include the terminal value or not. If yes, then it'll take the trailing 12-month revenue and multiply it by whatever multiple you have here, and that will be the exit value, and that flows through to cash flow accordingly. If you select no here, then that goes away, and it also goes away on the relevant tabs. Cash sources, so here you're only inputting one thing, which is any funding you're going to get from traditional debt, and that's going to go through to a normal amortization schedule. Note, if you do select yes here to include terminal value, any debt remaining on the end month will be fully repaid and come out of cash flow. Then we've got equity required for the project. So this is the main variable that's being solved for with the model, and it takes any startup costs and any burn over the course of the 5 years and puts it in here. And then that amount is what's needed from investors and or owners. Now you can see these are all populated values for owners and investor equity. You can go over to the cap table and define the month of funding as well as the amount received. And you can do up to 6 slots here, as well as enter, well, this is automatically populated for the remaining equity, which will go to the owners operators. We have some tax stuff down here. If you want to include taxes, the model will look at net income and apply a rate, or net income before tax, or taxable income rather, and apply a rate to it. You've also got long-term capital gains because there is a fixed asset schedule under CapEx, and you can apply some of the terminal value to some of these if you wish. If not, you can go terminal value and hit 100% here, and then it'll just all go to extraordinary income. So basically, you're trying to define cash flow after taxes. And if you don't want to include that at all, you can just zero out these, and that's fine. At the bottom here, we've got sanity checks to check all the relevant values. This is to make sure all the balance sheet, cash flow statement, income statement numbers match with the monthly and annual details, the executive summary distributions. So these should always be 0. If they're not, there's an error. And I have checked this, so you should be able to change anything in light yellow and you won't break anything. Okay, if we go to activity assumptions, you've got basically 3 types of items that can list on your marketplace or network that cause activity. You can pick the start month that they happen and the amount of items listed and the percent that grows each month by year. Then you could do the value of a unit given. So this is going to be multiplied by the amount of units for each item type to get your total volume. And then here's the network fee charge per transaction. And you can go to buyers. You can also do to sellers if you want, or one or the other. And then you can do a percentage of the items listed that actually transact, because they might not all transact, so you can account for that here. These are basically KPIs or key performance indicators of this type of business. So you would define those as drivers. And then I also did a logic here where you can do a standard listing fee for sellers, and that could be 0% if you don't have a listing fee, or it could be some percentage, kind of like eBay does that. Also, you can do advanced placement if you want to define some percentage of each item level that gets listed as advanced placement, and some percentage increase in price for those priority placements. Finally, you've got ad revenue. If your network also makes money by displaying ads, you can define that here based on impressions, average page views per user per month, unique monthly visits, and then CPM or revenue per 1,000 views. So that's all your activity assumptions. Cost assumptions here are pretty, nothing was changed. It's just a fixed asset schedule. We got G&A, R&D, we got some marketing costs, cost of goods sold. You can define all of that logic here by month. This is the monthly cost per year. Startup cost is just a startup cost schedule where you can put in anything that you're going to put before operations begin that you got to spend money on. Debt schedule. Here you're basically just defining the start month and then the terms of the loan if you're going to take out a loan for some of the startup cost financing. CapEx, like I said, you can define the item, the cost basis, the useful life populates. This will go to the income statement and affect taxable income. Also, the month of expenditure is relevant here. The top row is always for a building. And if you don't have that, or if you're renting, you can just zero it out. Terminal value I already went through, but it shows you how the total exit value, in this case 233 million, is populated, as well as in that building, like I said, is separate. So it's a separate item for any proceeds at sale. Cap table I went over, but basically you define the month of funding, investment amount, valuation that defines the percentage of ownership for each round. Also, this spits out an annual IRR, the initial investment, total return, total ROI, annualized ROI. It's basically percentage share by month. And this model I've done a little bit differently when I built it originally a couple years ago. And this allows you to have a dynamic start month for or month of funding, which normally I do it right at the beginning, but here you can do it, spread it out a little bit. Next, we have income statement, balance sheet, cash flow. This is all fully integrated into the model. So income statement gets down to net income, monthly, and then here's the annual, 5-year, same as the monthly, and there's our checks to make sure it matches. Balance sheet, you got assets, liabilities, owner's equity. All this is dynamic based on all the assumptions you put in through the yellow tabs. Balance sheet annual. Cash flow statement shows you operating, investing, and financing activities based on all the assumptions that exist, not changing cash each period, monthly and annual. Distributions, this is going to show you where the total amount available to distribute populates for each entity, which will be basically any positive cash flow months will populate here based on the percentage of ownership share. Net present value and discounted cash flow analysis per entities also exists, as well as for the project as a whole, or for the operators, that is, not the project as a whole. If you want to see project as a whole, you'd have to go to the cap table and just zero out all of the investment here, and then it would, then on your distributions, it would just show down here would be the whole project. Executive summary is a high level of all the different revenue pieces, some visuals on that, gross profit, expense items, categories, EBITDA, other cash flow items, and down to cash flow. And this will balance with your cash flow statement, balance sheet, and the monthly and annual detail as well. Because it's the same data, just presented a little differently. We've got visualizations here. So revenue by type percentage, expense items, other cash items, cash flow post-tax, EBITDA per listing, investor and owner cash in and out, monthly cash flow versus cumulative, ownership share over time, annual IRR versus annual ROI, cash flow distributed per entity per year. So some cool charts here. You got a break even, just takes variable and fixed costs and gives you your break even revenue required each year. Monthly details. This is where all your granular bottom up assumptions will populate. So you can see, here's the listings by type, the transactions by type, the transaction volume, listing fees, transactions, the value of transactions. Then you got fees for buyers and sellers. Oh, sorry. So this is a fee on listing value. So like I said, there's based on the total amount listed, you can potentially define a fee for that. And then based on items transacted, which could potentially be different, there's a fee on that as well that you could define. Advanced placements, fee for advanced placements, then total fee revenue is just adding up all three of those items, which is just revenue from advanced placement, transaction volume, and fee on listing. Then we've got ad revenue, just looking at users, unique monthly page views, revenue per 1,000 views. Ad revenue, then you've got total revenue here. We got all your cost of goods sold items. We work down to operational expenses. And then we finally get to EBITDA on the monthly detail, debt service, investor funding, different values for other cash flow items, final cash flow, taxes, cash flow after taxes, some advanced metrics here. So that's the monthly and annual detail. Okay, so that's it. That's the fully upgraded network or marketplace financial model. I'll list it in the description box below the link to purchase. I'll also list it on Eloquent and eFinancial Models. See you guys on the next one.